welcome to this special edition of Straight Talk with Bren O'Brien and Tim Rowe from The Straight, brought to you by our sponsors, Inglis and Darley. Today, we look at the latest developments in the Rosehill situation, as well as Racing Queensland under the microscope. We speak to bloodstock agent Will Johnson about the great reset racing needs to undertake. We talk about stallion fees and assess the current stallion tables. In wagering, we discuss the doubling of bookie fees and NT, plus what does the second term of an Albanese-led government mean for ad reform. Tim, great to you on board again. Let's talk Rosehill. Biggest story going around at the moment. We're 12 days out from the vote. You don't mind having a bet every now and then? Well, who's your money on, Tim? Who you thinking's going to get over the line, or yes or no, on May 27th?
Soon after last week's recording this edition last week of Straight Talk, I did speak to Steve McMahon from the ATC, obviously a central figure in this whole saga, I guess, of will they, won't they, can they get the $5 billion deal over the line? Look, I think it's got, the no vote was overwhelming, unbackable short of odds on sort of not that long ago. I think it's certainly the yes vote's firmed to a degree. I'd still have no vote the clear favourite, and I think that's what will happen at the vote on May 27. It's just, the no voters are very prominent and out there and seem to be heard everywhere. And you just, no matter what, you're not going to change their views, I don't think. And rightly or wrongly, that's just the position they've taken. There hasn't, outside the ATC, there hasn't been that many yes proponents, I guess, out there willing to put their opinion on the line, even though they do exist. Until this week, really, I guess. Charles Kelly put his name out there publicly, stating that he was for the yes vote to sell Rosehill.
Yeah, it's been an interesting week. We saw on Sunday the ATC announced that they had secured a memorandum of understanding for a $350 million purchase of the Penrith Golf Club, should the Rosehill thing go ahead. Obviously, that would all be dependent on that. That was interesting. That pretty much secures a site which would be the training track and most likely a racetrack ongoing longer term. $350 million, a lot of money, but when you're spending when you're getting $5 billion in receipts, it's probably not, it doesn't seem that much. So a significant moment. Obviously these things take a while to work out, but probably the surprise was that it didn't come out in the initial briefing, but sometimes these things don't always align with that thing. The other significant aspect this week was Racing New South Wales effectively backing the Warwick Farm plans, saying it was happy enough that obviously it had come up with the contingency that you have to replace Rosehill like for like, and that a new course at Rosehill, a new track at Warwick Farm and two tracks at Warwick Farm effectively would actually do the job of replacing Rosehill, and then obviously you got Warwick Farm's existing track would be replaced as well. So it was said it was satisfied with those plans. That was significant. What was also significant is that Peter Valides confirming that the Racing New South Wales won't seek any of the $5 billion that the ATC will get for this proposal should it go through. I guess from that perspective, he'd sort of alluded to that before, Racing New South Wales had, but there was some concerns raised early in the journey, especially around governance of that money and management of that money. Racing New South Wales don't have any issue with this. Now, it's an interesting point of the debate, I suppose. I guess we've noticed Racing New South Wales have been standoffish, and I think it necessitates them standing back because it is an ATC decision. Obviously, their most significant intervention in the whole thing so far was to call off the first vote, Tim. So it's sort of interesting the way the sort of politics are playing out over time. And as you mentioned before, the wind has come back behind the yes vote a little bit more in the last few weeks. I think the document, the 111-page document that they released last week, has probably gone some way of allaying people's fears. There's probably a few other things that people have got, but there's still a lot of questions. There's still a lot of things unanswered about where things are at and whether Warwick Farm will get approved by the local council. It's a massive project, $800 million. I guess the other point too, Tim, which I want to raise with you, the ATC sent out also a missive this week talking about, the 10 points that the Save Rosehill group have come out against the sale of Rosehill. And they've sort of rebutted each of them, literally put wrong in capital letters next to all of them. Have the ATC spent too much time trying to fight Save Rosehill and not enough time trying to prosecute the case with the members who are undecided?
Yes, but Again, talking to Steve McMahon last week, they argue that this looks like it's on the run, and they basically used that, or Steve basically used that term, I think. But they argue it's because the push for time the government needs to know for their metro tunnel, to metro station, and this whole project banks on that getting off the ground. And so they argue that they're pushed for time. That's why it looks like they've, things change from week to week. That's their argument. On the no side, I've spoken to no proponents, as you have, Bren, who say, well, that's ridiculous. The government said they needed to know in March, and what's changed, and earlier, and that the deadlines keep changing, or is it changing? So many unanswered questions still. So I guess from the ATC board's perspective and executives, they need to answer some of those, or be seen to try and put out some of those fires started by the no campaigners and save Rosehill, and that's their political attack, or the way they've attacked it. Whether it works, we'll wait and see. But like the federal election, I guess you can examine that afterwards and go, the Liberals and Coalition should have attacked the election in a different manner. Maybe they get a different result, but all these things are easy in hindsight.
Yeah, it is. It is an interesting one. It has been a divisive force within racing. Yeah, and I think that there's some challenges about the way things were done. I guess we're talking about a massive project of the size and scope that Australian racing's never seen before, and a $5 billion injection back to the ATC. It is like, it's life-changing stuff. You would want to get all the details right, I suppose, before you got to that stage. But I guess we'll find out that the members will make their decision on May 27th, and we'll, from there, that will be a point where, we'll know the next stage of this whole journey and where things sit. We'll talk through the possible fallout if it doesn't get through, or if it does get through, when we get to that point, I suppose. The other one I wanted to mention from a racing point of view, Tim, was a situation Racing Queensland at the moment. The Queensland government have put Queensland racing in a review state. They've consulted with the industry, and they've sort of gone away now. They've come back and formed a 4-person committee to actually work on this review, which will report back to Racing Minister Tim Mander later this year. It's probably October, November. Look, they're probably seen as a broader positive. They always said they'd do that. The challenge is for Racing Queensland, right? They're in a leadership perspective, they're in a sort of a bit of a state of flux. At a board level, Steve Wilson's term, who as chairman, long-term chairman, expired on the 1st of May officially. He was extended for 6 months. Now, that wasn't announced by the government. In fact, it wasn't announced at all until we put it on the straight yesterday, when we asked the question, because we just looked at the terms and said, what's going on with Steve Wilson's term? Oh, no, we've extended him for 6 months. We didn't announce that. Well, that's so be it. So his term has been extended. So you've got that. Another board member's left, who was in charge of the greyhound aspect of it. So there's probably a board member short. There's no official answer from the government if they're going to replace that person, or what that look like. That was Dale Cartwright, whether they're going to replace that person, or what things look like. So there's those questions that are at a board level, a governance level. And then we've got the uncertainty around the CEO stuff, right? So we've got Jason Scott, who resigned in January, leaves in sort of late July, I believe. So in that situation, you've got, he's sort of not out the door, but he's doing other projects. Lachlan Murray's come in as acting CEO, and I'm sure he's doing a good job. We both know Lachlan, and he's, I'm sure he's putting, but he's going to do a good job. But that interim CEO role, that CEO role cannot be filled while they don't know what the board looks like, and the board can't be filled until they know what the review looks like. So if you sort of play that out and say that review comes back in September, October, the board, bear in mind in Queensland, you can just refresh the whole board. So they might just decide to chuck the whole board out and start again if they want to. It's up to them. So then the board gets refreshed, and they come in, and they've got to make a decision around a CEO, and they've got a CEO process then. So you get the feeling from a permanent CEO point of view from Racing Queensland, it could be 2026 before we're actually hearing anything about, where this sits. So I don't think that's a net positive for Queensland racing. I mean, all places have to go through times of transition, don't they, Tim, and work through that. But when you have a few things line up at once, where you've got a review going on, you've got sort of, a handover sort of uncertain situation around the board, and you've got a CEO leaving, it's not necessarily positive for the future direction, or at least the short-term sort of vision around to Queensland racing.
Absolutely not, though. You feel sorry for the executives day to day doing the work, and the staff there at Racing Queensland, and even liaising with the clubs like Brisbane Racing Club, trying to get initiatives off the ground to, encourage participation or improve racing in Queensland, and it's just hard. It would be hard to make those definitive decisions when you've got an interim CEO, and a review of the racing industry in Queensland to really take long-term strategic views on things. At the moment, it'd be treading water for sure.
Yeah, and I think it's sort of we talk a lot about Victoria and New South Wales in Australia. New South Wales and Racehill's dominated, and what goes on Victoria. Queensland is such an important state to Australia. It's such an not only this time of year when we're talking about Group 1 racing, but we're talking about Magic Millions time. We're talking about the Magic Millions sales and how important they are. We talk about the overall strength. We talk about the fact that Queensland hold more race meetings than any other state in Australia. That's got a large, broad geographic spread of engaged racing people. It is a difficult beast to manage because of its size, but I think it's important that that it's well led and well run, and I hope that this review's take as a chance to maybe reset things and move things forward. But there are some challenges there, and likely to be some sort of budgetary or funding challenges going forward, given where the wagering landscape's at the moment.
Must be fights for for funding. I like the Cairns and Townsville Cup carnivals that I've been to, and of course there's Birdsville, which iconic meeting but costs a lot of money to run. All those sort of things that I'm sure will come up in the review, and then the new leadership will have to decide on these things and how they fund them and who gets what.
The following segment is brought to you by Inglis, and joining me is Nick Melmoth from Inglis Digital to have a chat through a fascinating result yesterday, Nick, where we saw an Extreme Choice, a share in Extreme Choice, of course, the highly valued Newgate stallion, selling for $540,000. Obviously, a good result for English Digital, Nick. It shows, I guess, the versatility of the platform, its ability to sort of tackle bloodstock transactions of various types.
Yeah, morning, Brent. It was a very exciting opportunity for us to offer that share in what is an exciting stallion. Great coverage on it and a great result. I think everyone was pretty pleased that we're involved in the horse. The stallion shares, mate, there's something that really sell well online, and personally I think they are one of the best offerings you can have online, because you're dealing with a portion of the horse. It's something that's very commercial, very sought after, and the horse doesn't have to leave its box. So it sort of epitomises the efficiency and the exposure that you can get online selling such a premium product.
Yeah. And I mean, when you've got a horse like Extreme Choice, and Steve Morley was the buyer, and we know Steve and Glen Logan Park very well in terms of where they are, but it does, I guess, at this time of year where people are assessing their breeding options moving forward and which stallions they're going to support and how they're going to move forward, and some are looking to trade out and some are looking to trade in. It's an excellent time to do this, especially when also they're making decisions around acquiring mares as well, Nick.
Well, it's that period of the year where stallions are being announced, service fees are being announced. It's just another level of the breeder's engagement in heading in towards the season. You want to get settled. You want to know what your plans are for the upcoming season. People have mares and they're looking for opportunities to go to these commercial stallions, which might be limited. And as you say, on the back of that too, then there's strong mare trade around shares that are being traded. People that are picking up those opportunities are then looking for mares to fill the spots as well on those stallion rosters.
Yeah, and on that mare market itself, like on English Digital, it's quite interesting at a time of year where we've got I guess we call them traditional mare sales sort of going on throughout May, both across Australia and where things are sitting at the moment. We're still seeing I guess records amounts of trade in terms of volume of mares being traded through your platform as well, which it's interesting. Like you would think that one would replace the other, but it doesn't seem to be the case, Nick.
No, it's one of those things we've seen strong numbers for a number of months now. Usually you see a bit of an ebb and flow, and we sort of fit nicely in between live sales on a regular calendar basis. But this year we've seen much larger sales across a broader stretch in this period. And I think that's a sign of the times, people using it as that efficient, cost-effective way to trade. But also what I've found is the pleasing part of it is the strength of the market. The clearance rates are holding out. Look, it's not a cakewalk, as we've seen in the rest of the thoroughbred market. It can be quite selective, but the overall strength, the numbers are there in the catalogues, but the clearance rates are still holding. There's good trade, there's good turnover, and we've seen that reflected in the sales results. I think year on year, every online sale this calendar year is up from last year, with the exception of one. So it just shows that there is still a healthy market and good trade out there.
Yeah, and the expectation is obviously then they'll continue to build up. Yeah, they'll continue to have throughout the year you continue to have these strong in-depth catalogues, and the market's demanding liquidity at the moment, and you guys are able to provide that, aren't you? So
it's that sweet spot you see with the online trade now, right through the start of the season, and even the other parts of the season. It'll be strong around the mares. Great opportunities, both buyers and purchasers, I should say. Like the parts of the catalogue, because we're a mixed sale, you'll have certain categories just hold up all year. Racehorses trade well all year round, and there's always big numbers. The share categories, as we get to that breeding season, it does drop off. Of course, mares are being put in foal or waiting to be confirmed in foal before they can be sold. But this is that sweet spot now that we sort of hit right before that period where a lot of sales are pretty much coming to a close. But we've still got opportunity to trade and move horses around the country before the breeding season starts.
Thanks for the update, Nick, and all the best for the rest of the Inglis digital sales season. And joining some straight talk today is Will Johnson, bloodstock agent. Will, thanks for joining us. Good to have you on once again. I wanted to talk about the article which you gave us some permission to publish on the Straight. Obviously, picked up on the fact you sort of published to your own audience, and we're glad to be able to sort of take it to a broader audience because I think it raised sort of several interesting points. It dealt with some of the broader challenges of the Australian thoroughbred industry, but also some of the opportunities that sort of situation represents. I mean, what drove you to write it?
I think it's important that any challenge we face is turned into an opportunity, broadly speaking. I do these sort of updates to clients or opinion pieces sort of quarterly or whenever an issue or issues I think worthy of discussion come to mind. I think it is incumbent upon my generation to really grab the bull by the horns and really flesh out the key issues that are probably going a little bit under the radar. And so spoke about 4 different sort of areas that sort of need addressing. And, whilst they are, issues that are a little bit or somewhat contentious, I think they need further discussion to flesh out the opportunities and really improve the sport as a whole.
Yeah, I mean, you raised several aspects. As you mentioned before, was the polarized nature of the bloodstock market, the ultra commercial nature of that market, and very, I guess cutthroat in some ways. The declining foal crop, sort of poor infrastructure planning, and a lack of a coordinated national approach across Australia. I mean, talking about the challenges, I suppose the opportunities to start with. I mean, what of these challenges do you feel is the most significant challenge for the Australian thoroughbred industry?
I think it's definitely the national approach. We're lacking cohesion and have done for some time. It probably goes back to the way the Constitution was set out 125 years ago and the powers that were given to the states, and obviously the revenues from gambling divided, and the way the whole country operates on many levels is state based. But I think if we look at the AFL and how through my early childhood it went from the VFL to the AFL, and look at what they've been able to create from what was the different jurisdictions to the national body and the power of the AFL, and just how well that works. As somewhat of an example, and it's not going to be easy, and obviously the taxation issue from gambling turnover is always going to be state-based, but I think we really need to sit down together and flesh out how to make sure the sport continues long-term most efficiently. And, the most important aspect of that is probably a consolidation of costs, whereby there's probably too many tracks. And I alluded to the JRA and, just a handful of tracks they have for a large population and a similar foal crop to Australia. Back of the paper calculations, there's probably 4,000 acres of turf that we have to water, fertilize, and maintain. And, if you think of the cost of doing that, and that's just, thinking of the turf on which horses are galloping upon, Not to mention the duplicated costs across race clubs. Thinking of Melbourne, there's 3 independent race clubs there. That's tripling, um, the expenses and so on and so forth. So they're big topic issues. They're very contentious. Not everyone's going to like them. But I think the only way to ensure that the sport survives long term is to really sit down and nut them out now, so that in 20 years' time, when like I'm 34 now, before you know it, I'm 54, and I'll have who have kids. I want my children to be able to enjoy racing in the same manner in which I have done.
What does that reset look like? Obviously, is that a Racing Australia to take that up to try and nationalise? The states aren't going to give up their gambling taxes or some of their powers, the governments, but is it you looking to a Racing Australia to take this sort of on and try and lead it forward?
Yeah, some part obviously Racing Australia, but I think the states need to work out that even within each state there needs to be a degree of consolidation. So I think it starts on a very small level, and it works its way up the food chain. But I think if all states can get together and say, okay, we need to have a refined product. We've got a declining foal crop, so we need to be able to make a product that is going to sustain the level of horses. And let's say the foal crop might decline to 6,000 or 7,000 in the years to come. What is the racing product going to look like to ensure that we have the right number of races for the right number of horses? And that obviously means a reduction in the number of tracks, the number of races, and that gives way to trying to create a better product, a better gambling product, in the manner in which the Japanese have been able to do. Obviously, their industry is sort of controlled by a family that have been able to secure the best bloodlines from around the world, and further down the line, they've created a racing product that can compete on the world stage and win the biggest races. But I think we need to look more at breeding a racehorse to perform there, rather than, as alluded to, a commercial product just to make money from.
Sorry, well, I just want to jump in, Tim. I just want to jump in there. The Japanese model is an interesting one because obviously you talk about the JRA, but there's also the NAR as well, which is a secondary model, which is sort of, I guess, equivalent of sort of state-based, I suppose, or local council-based. Local government, the way that it's run. Yeah, I mean, it is an interesting model, isn't it? Because you have that 2-tiered model whereby horses which aren't the sort of elite of the elite sort of exist within that NAR model, which is it's got a different funding structure and possibly a different sort of purpose, doesn't it? I mean, that's probably the challenge racing has in Australia, is that it probably faces 2 ways. You've got the the highly commercial aspect of the big days, but you've got the other sort of both community-based racing and I guess we call it turnover-based racing. I mean, could that 2-stream model apply, take away the fact that, we've got states and all those challenges around. Could that two sort of stream model apply in Australia, do you think?
Yeah, I think so. And grassroots racing is the most important of all. It harbors the talent, whether it be jockeys, trainers. If we think of where Peter Moody's from, John O'Shea's from, where Tommy Smith was from, they're all from, regional areas, and they've gone on to, be Hall of Fame trainers. So not for one moment of an argument is taking away from grassroots training, but as you've said, I think a 2-tiered or a multi-tiered sort of model needs to be explored in more depth, because if you look at the turnover of the Japanese racing, it is quite remarkable, and they've been able to successfully implement the JRA and then the local government style of racing, which sort of feeds through to the big race courses and big days. It's definitely a starting point for us to look at.
Well, you touched on the foal crop possibly going down to 7,000-8,000 in the future. The cost of breeding a horse, well, the sales are still quite strong, really, but it's the input cost and production cost that's hurting a lot of breeders. And service fees are part of that. Do you have a view on overall service fees having to come down? And for that to happen, someone has to take a hit along the way, don't they? But do you have a view on that?
Well, yeah, service fees are based upon supply and demand. If there's enough demand there to pay a very high service fee, such as a Wooden Basset, I'm Invincible, Zoo Star, Schnitzel, there's enough people, breeders willing to part with that sort of money. I think it's the middle tier that are struggling. So it's very hard to restrict trade whereby you're saying, okay, you can only um, have a service fee up to X, or we all need to come back in line. But what I think the issue is that we walk into a yearling sale and the credit available for everyone ensures that the market has remained strong for the last 20 years. So I know in America and England, you have to pay for the horse, basically within a month. Here, it's 90 days, 120 days, rolling years upon years of credit. So everyone's happy to go and bid to a level at which they don't actually have the money necessarily. So if the credit is reduced, people won't go and bid as much on the horses. And then that pulls in line the service fees because, it's a snowball effect. If people aren't paying overs at the yearling sale because they know that they don't have the money for it, that's going to really tighten up the industry and clean it out, which, that's one way of looking at it. I'm not saying I'm for or against it, but I think it needs, further discussion and looking into, because it's very hard to unwind credit. The whole world's effectively run on credit. But it's probably a build up in Australia, unlike all the other countries where the sales houses have given the power to the buyer to speculate. And, as I spoke about, the buyer's getting shrewder. There's more people buying less horses. If you look at the number of shares been available over the last 20 years in horses, that's dramatically increased. So people are able to sit back. They've learnt a lot. We've given them the information through training updates, etc., which is fantastic. And then that's a part of why owning a horse in Australia is so fantastic and great, is that the experience is much better than other countries, just to the layman, or the guy at the pub who can have 2.5% share in a horse. But it's also given an education to them, so whereby they've concentrated on quality rather than quantity coming out of COVID. And just speaking to trainers, a lot will say people that used to go into 3 or 4 horses a year are now going into 1 or 2. So yeah, if we're producing too many horses, the tail gets long. There's not enough people to race them, and that's obviously going to create challenges in itself.
Yeah, and beyond the foal crop, obviously, there's the importation of horses as well too, Will, which is, I think you sort of made reference to as well. There's a sort of a layer on top of that that's investing in that. I mean, we live in a global world. Some of these issues are Australian issues and Australian structure issues, and some of these issues are global racing problems. When you sort of, when you go around the world and talk to people, you obviously talk to people in Australia in the sales, and obviously this, these ideas and this concept is something you've built up over time, talking to so many different people. But what issues are you finding are global issues, are something that actually is beyond the Australian industry's capability to assess? And what are some, we've probably already alluded to some of the issues which Australia can sort of address, but what from a global perspective does racing need to look at across the world?
Yeah, I think there's so many issues you could obviously discuss, but if we look at America, at the moment they've got the same problem with the potential sale of Gulfstream. So if you think of Miami, where Gulfstream is, it's a population of 6 million, very similar size to Sydney. The track's 30 minutes from downtown, exact same distance, Rosehill to Sydney. And that's that's an issue, is that the land on which these racetracks is worth, it's hard to sustain them longer term. That's happened over in the west coast of America. Hasn't happened in England as such yet. It was mooted that Kempton would be sold, but the Jockey Club obviously have quite a strong handle on the long term game there. But I think it just looking at America, the sales and even England, like the breeze up sales the other week, the top end's very strong, but it's just finding people to race just an average horse that doesn't quite meet the strict criteria by which the market's honed in on over time and experience. You know, AI, etc. You know, is really taking a hold, and people can make more informed decisions based on data.
Well, we just had chairmans last week, and there's the Gold Coast Wendling and Mare Sale coming up on Sunday week and the following Tuesday, Wednesday. What did you make of chairmans first of all, and what do you expect at the Gold Coast?
Yeah, Chairman's was great. Inglis did a fantastic job of putting together probably the best catalogue they've had so far. I think it again shows the focus on fillies off the track, you know, big, sexy, good-looking fillies with the race performance like your Estriellas and Tis Invincibles, whilst you know, and the group performers that are making what Group 1 winners made five or 6 years ago. And yeah, probably hollow middle to the mares in foals section of the catalogue, which you know may pick up in a couple of weeks on the Gold Coast, just with the way that the catalogue's structured. But also probably shows just a handful of people at the top end buying those fillies, and you know we need more people like you know Coolmore, Yulong, John Stewart, etc. Really coming in at the top end. We're quite shallow in that regard, and it's another issue. You know, it's a challenge and opportunity. Let's use it more as an opportunity that we need to try and get more sort of big money into the sport in Australia.
Well, we'll let you go because I believe you've got a pretty busy day. You're heading off to see, well, actually a little bit before you go, it's a little bit interesting one. We've got Coolmore showing off Switzerland today. I think you guys are showing off Capitalist at a similar time. Showing off their horses at a similar time. It seems to be like there's been a bit of a shift this year towards some of these studs showing off their stallions a bit earlier in the, yeah, a lot earlier. Usually we get to the stallion parades in sort of late August or mid-August. And yeah, what's driven that, do you think? What's driven this sort of more of a pivot towards ahead of the mare season showing these stallions off?
I think it's this timing and how well the horse looks. I think a few farms have made the mistake the last few years of showing the horse too early. So I'm tipping Switzerland's, you know, he's not looking like he ran last week. He's probably let down, and he's a beautiful animal. You know, if I had a Colts fund, he would have been the one I'd like to have taken home the other year from the Easter sale. He's just, you know, fantastic specimen, and he obviously ran the quickest Coolmore stud stakes time of all time. So looking forward to seeing how he looks today. But yeah, I think it's case by case. If a colt doesn't look as well, they're not going to show it to the public. People can probably too quickly jump to a conclusion that the horse might be a nice type, or he's too light, or he lacks depth. But yeah, I'm sure he'll look good today, and so will the Newgate Stallions when they show them off later today.
Yep, terrific. Well, enjoy your time up in Hunter Valley, and we'll catch up again soon.
Thanks, guys.
Thanks, Will.
Cheers.
Traffic Warning offers a lot of value for breeders this season. A Group 2 winner at 2, he only just missed in the Group 1 size, then came back stronger at 3 to win the run to the Rose and pushed broadsiding right to the Y and the Golden Rose. Add to that proven Street Cry line and his impressive physique, and you've got a stallion that offers real quality at an accessible fee. He joins the Darley roster for his first season at Kelvinside. Tim, to tidy up the bloodstock space of our chat, extensive, very interesting chat there with Will Johnson. One of the stories we covered this week was the most expensive. We've got the most expensive average commercial stallion fees ever in Australia now. The average price of a stallion above 10,000 has now reached, I think, about $45,000, which is the highest that it's ever been. It's obviously driven by the top end, but I mean, what do you feel like it says? We discussed with Will a bit about sire fees, stallion fees, and where they sit. But what is your perception of where things sit at the moment, Tim, and whether it's a realistic market?
Will touched on it. It is a supply and demand thing. People, breeders need to weigh up, commercial returns or their value, what they perceive as value, particularly outside the obvious champion stallions or the most commercial. It's those, the majority of the mares are going to either first season or, stallions on the up, hopefully, but, it is a punt. Service fees arguably have to come down, but I guess what's advertised and what you might pay for those unproven stallions or stallions that might be going through a rut might be, are arguably different. Anecdotally, stud farms and stallion marketing teams found it incredibly difficult or increasingly difficult last season for those second, third, fourth season horses to get mares to them because breeders weren't prepared to take the risk. If they get it wrong, they're just penalised in the sales ring. Unfortunately, you've probably seen it with Russian Revolution to a degree this year. They, off a high fee and just had a bit of a low run. I think you can bounce back, but if you got your timing wrong, you got penalised in the sales ring. So stud farms will have to, stallion farms will have to sort of, I'm sure, will negotiate and do deals on some of those stallions. So the advertised and what they pay might be different on the ones that are just aren't the top echelon or aren't first season and popular, I guess, in front of mind, probably the better term.
I guess the concern becomes a bit too extreme, doesn't it? And that we have a situation where you have a bunch of size high flying and going into more 200,000 plus size than we've ever had before in Australia. And then you've got the other sides that are going back the other way. So we have people make their minds up pretty very quick on their size, don't they?
They do, and I guess it points to not a lack of, possibly a lack of depth. 15 years ago, there was probably 6 or 7, 8 stallions that you could breed to. They were all very, very good with Exceed. Excel was coming through, and Fastnet Rock, and More Than Ready, and Sebring, and a heap of them you could. Where at the moment it's very concentrated, and so outside those proven champion stallions that are getting quite old, you do have to take a bit of a punt on the new stallions coming through, or that the stallion that started promisingly is going to be able to maintain that momentum.
Then we'll just have a quick look at the side tables. I think it's sort of interesting time of year because we've had a bit of a change at the top of the general size table in Australia. Zoostar's now claimed the lead from Pride of Dubai. Pride of Dubai is pretty much, I think, has been leading since the Everest, since Bell and Neptune's Everest win, and Zoostar's finally sort of wrested control. We knew this was going to happen. It was probably just a matter of time because Zoostar's numbers, he's had almost twice as many runners as Pride of Dubai, so it was always going to be a case that he was going to be able to get there. He's had more than twice as many winners too, so that helps. But it seems an all sort of foregone conclusion that Zoostar will be crowned champion side this year, which is a sort of not a turn of events necessarily, but it's an interesting turn of the clock, I suppose, that we're going to have a younger sire be our champion side this year.
Well, he's sort of always been. He will be the next one, and he hasn't. I'm invincible the last 3. Sinsel for 4 years before that. He's coming. Will he get there? And he's hit the front. There's still Pride of Jenny racing for Pride of Dubai. I think it's the Doomben Cup on Saturday week. So if she wins that or runs well, it's going to add quite a bit of prize money. But you'd think he's, I'm not going to say he's home, but certainly very hard to beat from here. I wouldn't rule out Snitzel either, who's on a tick over 20 million in prize money and sort of.
He's having a remarkable season, isn't he? Like he's having a great season. And I'm Invincible is not that far behind that at 19,000. So it is probably a tighter challenge than we've probably had for a while in terms of the top 4, but it does look like Zoostar has the numbers on his side. But those older stallions keep on producing those, they're quality horses, don't they?
Sure, and that's why they'll be popular again, or they'll be managed books, but they'll be, even at the high fees, they'll be booked out for sure.
Yeah, terrific. And I'll just go through the other sides too. We've looked back through Broodmare size. Fastnet Rocks is pretty much his home. Is $10 million clear at $31 million. He's had a terrific season and going really well. Ole Kirk is ahead in the first season size. You would think that he probably will hold on. He's about 500,000 ahead or 450,000 ahead of Wooten Bassett. Probably not enough 2-year-old. Just a couple of Group 1s. It's one Group 1 left and a couple of other price money. But it would seem like Ole Kirk's probably got enough in the can at this stage to kick away and win that, Tim.
Well, yes, although Wooden Bassett's got some nice 2-year-olds that have won sort of, I think it was midweek Sydney last week, that are possibly going to Brisbane. And so, with the J.J. Atkins and the Sires and a few other 2-year-old races up there. He could get a bit of a run on if he get a few of those fire up there. But Ole Kirk's got a lot of nice horses out there as well. So you'd think he's going to have a few new winners and earn a bit of prize money before the end of the season.
Too Darn Hot has broken all records of second season side this year. He's had a remarkable season, over $9 million in earnings, headlined by broadsiding, of course. And we'll see Too Darn Hot come back. Leading 2-year-old sire in the country at the moment is Snitzel, who, of course, helped by Mahuna winning the Golden Slipper, but still he's had $4.3 million from his earnings from his 2-year-olds this year, which is a terrific result. And just having a great revival this year, Snitzel, and he's doing very well with his 3-year-olds as well. Written Tycoon is the leading 3-year-old sire in the country at the moment. He is on, he probably will hold on. He's got 9.5 million, 9.6 million for his 3-year-old. Snitzel's got 8.3 million. Bit of a fight there at the top. 2 old greybeards fighting it out, but it's, again, 8 stakes winners from that Witten Tycoon crop and 9 from Snitzel. What we probably should acknowledge from that, Tim, is that both of those stallions stood at Arrowfield that year for that 3-year-old crop. So it's a feather in Arrowfield's cap that was able to work out. But you say we don't, the problem in Australia is we've got a great band of absolute champion stallions in that 20 plus age range, and we've got Zoo Star, and then we're probably going to step back to the rest in terms of age. But it's just the way that it works out. It's a bit like the old tennis analogy. Once Nadal and Federer and Djokovic and Murray and these guys go away, the big four, what happens to the next generation? And it will happen, and inevitably you can't stop time. But it'll be fascinating just to see what does the side table look like in 5 years' time, Tim? That's probably the question, isn't it?
Yeah, if I could predict that, I might be working here, Bren, because you make a lot of money if you got it right. But look, it's one of that's the fascinating part of the game, is trying to, people make hard and fast calls on stallions, and I guess the easy thing is to pot a stallion because most of them don't live up to expectations. But gee, you just get found out if you keep making absolute going public with absolutes on stallions or horses or trainers or anyone. It's very hard you'll often get found out.
All right, we'll touch on wagering now, Tim. And an interesting weekend wagering, couple of stories worth touching on there. The first one is that the tax cap in Northern Territory has been doubled. There's been a significant impact of that. The bookies are up in arms. They feel like their costs have been doubled. The revenue from bookies into the Northern Territory government in terms of this this aspect of the contribution will goes from about, I think, 17.5 million to 34 million, so almost doubles. The concern is around this tax situation, or what's going to go on here. It's going to impact the smaller bookies much more significantly. The bigger bookies will probably suck it up and make it work for themselves. But look, I think it's probably easier for us to sit there and go, well, bookies should pay their right whack, and that's a reasonable enough opinion. But it gets to a point where we know that none of these companies absorb these costs, did they, Tim? They usually pass it straight onto the punter, and the punter's the one that ends up worse off for it.
That's right. I guess from an NT government perspective, maybe they can argue that the bookies that have been housed up there, a lot of them for probably 20 years, haven't been paying enough. They've been getting that's why they ended up there in the first place, because it was cheap taxes or low taxes, and now they're probably just trying to catch up like everyone else with pop taxes and things like that. And realistically, the NT government enforce or putting in a POC tax isn't going to raise too much, just given the population of the NT. So I guess this is the way of getting a bit more revenue into Treasury.
Yeah, you'd hope it wouldn't lead to an exodus, because obviously it's been a significant industry up there and has developed a lot of innovation. The Australian industry has developed a lot of innovation over the years, and I think that's probably rightly or wrongly, people might say about the Northern Territory model that it hasn't been ideal, and maybe that the contribution could have been different, and it disrupted the Australian market in a way, but it certainly led to a hothouse of innovation and drive, which enabled particularly Australian racing, to do very well out of this. To do very well out of this corporate maker boom, because the changeover was quite significant. So I think anyway, we'll see what plays out with this. I think probably what the industry are probably filthy about up there is they were consulted about it. They pretty much got a day's notice. And that's a bit of a concern. The other thing, talking about consultation, is we have a new communications minister in Australia, Annika Wells. I'm pulling together a story on this at the moment. Be fascinating to see how this one plays out, Tim, because there is a feeling that Attica Wells's view on the gambling ad reform is much more aligned with probably what the Prime Minister, Anthony Albanese, sort of has come about. She was previously a sports minister, so she's had a good relationship with the sports codes and understands their concerns around about what broadcasts, a drop in broadcast funding would do for them. So there's a few challenges around that and probably things that they need to address, but it's an interesting one. And I guess the fact that probably we weren't necessarily, the market certainly weren't expecting a majority Labor government, which means they don't have to now deal with the Teals and the other crossbenchers and the Greens in order to get to get legislation through. So therefore, perhaps it changes the way that they can approach this gambling stuff. So look, we don't quite know yet. Attica Wells hasn't said anything yet, but it's look, interesting times as always, and we'll watch this space because we've been awaiting this reform since the release of the "You Win Some, You Lose More" report in mid 2023. So it's been a while now. All right, thanks for joining us on Straight Talk, brought to you by our fabulous sponsors, Inglis and Darley. Don't forget to give us a rating wherever you're listening to our podcast, be it on YouTube. You might listen to us on Podbean. You might listen to us on Apple or Spotify or any of the other platforms. Be sure to subscribe. Send us an email at editor@thestraight.com.au, and we'll talk to you again next week.